Hang Seng, for instance, that's down a little bit. You have the Taiwanese market, which is holding up.
We doubled down on Adani in May and June, and then we maybe tripled down in August.
The immediate support for the Nifty to work day to day comes in at 21,448.
I don't expect the HDFC Bank stock to fall as much as what the ADR did online, because I believe that this premium is going to get, compressed.
There's just one word to describe the Q3 numbers for ICICI Prudential, and that is terrible.
Here's the first tick on the index. It's down about 130 odd points.
The India demand, we believe, is going to be in double-digit numbers.
Most of the arbitration where we lose, we end up paying a lot of additional money.
The sensex lower by 300 points. And today you are seeing mid-caps falling a little bit more.
See, generative AI is a good buzzword, and people are trying to see what it can do for them.
It was definitely a very, very strong October in terms of what we could see.
Majority of the order book that you see right now is cost takeout and efficiency.
It is a 170-point recovery on the Nifty from the lows.
Well, it's the day after, and the struggle is still on, you'd have to say. This is the last hour. Welcome to Closing Bell. I'm Surabhi Upadhyay, and on my show, as always, is Nigel D'Souza. We have Ekta with us in the studios. And Ekta, we could use some of that good luck charm that you were bringing to the show. I think it was last week, right? Because, guys, I mean, the struggle has been on, and it was a, very, very brave fight back by the Bank Nifty, by the Nifty as well. But, the battle is not yet won. I guess we can say that.
Well, that's right. But at least things are looking a little bit better than what they looked like this morning, right? Because you had the mid-cap index at one point of time was down 2.5%. So you pull up the advanced decline ratio, at least you have just one stock that's, now advancing for two stocks that are declining. Not as bad as what you feared in the first 90 minutes or so. We're not out of the woods. But I think the bulls will be happy that we're closer to around the recent support of 21,450. And all's not lost. There's still a good battle that's on. In the next 60 minutes, you'll have this contract's weekly expiry that will play out. So let's see how that goes.
Hi, guys. Yes, absolutely. But, if someone was to look at the screen now, they'd say, oh, my God, there's another day of profit booking. If you look at it from the morning, then you say that, there is a recovery. But nonetheless, you have to describe the market as tentative at this point in time, still choppy. Let's see what the FIIs throw up, post markets in terms of the cash figure. That'll be important to assess what's on their mind as well. A lot of what's taking place is also global, because we have the European markets, which are tentative. We have the Chinese shares, which are at 5-year lows. So it seems as though the market is also factoring in the fact that central bankers are not really going to act in terms of cutting rates, especially at a time where freight rates could probably be impacted going forward as well. So a lot on our hands, and I think banks and financials will be top of mind.
No, they absolutely will be. I just want to put out some basic levels that perhaps our viewers will keep in mind. Let's just go back to the lows and look at where we are. The Nifty is fighting very hard to somehow get back and retain above the big support zone of January, which is the zone of 21,450 to about 500. There was a breach of that in the morning. We fell way below that. So the morning low was about 21,285. But then there's been this effort to go back to that, at least that consolidation zone of 21,500. The 20 DMA, of course, still distance, some distance for the Nifty at 21,600 plus. Bank Nifty. Now, the Bank Nifty is where there's been a bit of a disappointment because of HDFC Bank once again. The pressure is on that stock. It's not, going away in a hurry. The 20 DMA is a long way off of the Bank Nifty. The 50 DMA, that was in play. The Bank Nifty had recovered to 46,000 plus. But again, then there's a second round of selling that we're witnessing on the screen right now. And today's low is 45,430. So it's important to keep that in mind as we go over the next 1 hour. Just, to keep the perspective intact, the distance from the top, the Bank Nifty's lost about 6% in this sell-off. Nifty's lost about 3%. But I think, Nigel, we don't have very clear answers because the pressure on HDFC Bank is still there. Reliance is positive, so that's some saving grace. But I guess we're not exactly out of the woods.
Well, on HDFC Bank, you don't want it to get past that 1,460 odd. I was looking at a sell-side report, and they were saying that at 12, 13 times, actually, you can't sell HDFC Bank. So maybe the downside is limited from these levels of around 1,450. And this is from where, in the month of October, we did have a bit of a rally. So let's see how it goes. The problem is that in the next few quarters, you may not expect any kind of positive surprise. So that's the problem. But valuations firmly in favor of the bank. Kush Bora joins us on the show to tell us how has he traded the Nifty as of now. Hi, Kush. Good afternoon. And good to see someone nice and happy in the afternoon, because the street is, a little bit disappointed with what's going on. We're not used to going down. And in fact, last few days, that's precisely what's been happening. You keep coming in, otherwise on a day-to-day basis, see 100, 200 point uptake. Suddenly, yesterday it was nearly 450 points. Today, we're down 150 points. Your view?
Hi, Nigel. First of all, very good afternoon to you. Well, in some ways, it is still a good afternoon, right? I mean, markets aside. Well, let me just put it this way. Is the downside really that much of a surprise? I can understand the fact that, this is, too much too fast. But if we take out the momentum part of it, is it really that much of a surprise? And, why do I say this? The seasonality of the January month is starting to, play out. And that's all that, there is to it, honestly, if you ask me. Also, incidentally, first week of January, when I was, on air on this channel, I said that, there's a very clear pattern that for the last 5-6 years, Nifty is followed. It crosses the December high, makes that suckers rally in and then falls. And that's precisely what we've seen again. So if you ask me very honestly, I'm not worried about the downside that we're seeing on the Nifty. Yes, it's a little too much in terms of the magnitude that we saw yesterday and the follow through that we're seeing today. But on the whole, this is not surprising. Also, perhaps, my smile stems from the fact that I'm looking at a fabulous Feb and March going forward.
Okay, all right. Well, what would your stocks be in what is quite a volatile market, Kush?
A couple of stocks, BHEL, the stock's been holding up, really well after a stupendous move. I don't think it's really participating in the kind of fall that we're seeing in the markets. So I think that's one stock that should be on everyone's radar from a trading perspective or be it from an investment perspective. 214, 220 are the near-term targets that we're looking at. 202 is where I would place my stop loss. The other stock, very similar setup, is HBL Power. In fact, if you see after a good month and a half of consolidation today in the kind of market that we are seeing, the stock's giving a breakout. So HBL Power is something that I have on my radar from a near-term perspective. Again, 495, 510 are my targets and 465 is where I would place my stop loss.
Okay, all right, Kush. Thank you very much for joining us this afternoon. We'll come back in a bit and try and get some more trades going with you. For the timing, let's focus on some earnings. And South Indian Bank has been rising higher in trade. It's reacting to its Q3 numbers. Abhishek is joining in. Abhishek, after HDFC Bank, will take any positive bank earnings with both hands. So tell us more about South Indian Bank. What has worked for this one?
ROA above 1% has worked, or investors have cheered that factor. However, it's not driven by NII but other income. So let's talk about the NII. NII is down 0.74% YOY and about 1.4% sequentially. The net interest margin has declined to 3.19% when compared to 3.52% in the previous YOY basis. So other income is at 452 crore, which is up about 27.2% quarter on quarter, and that's along with the fact that provisions have declined sequentially has worked for good in terms of PAT. So PAT is at 305.4 crore, which is up 197.2% YOY and more than 11% sequentially. Deposit growth, that's on the weaker side, growing at 9.4% YOY and about 2.1% sequentially. However, the cost has worked out to be negative for them. So 2.1% sequential growth in deposits, but interest expense is up more than 5% on a quarter on quarter. So watch out for this factor that all the banks are seeing massive rise in the cost of funds and net interest margin is declining. In terms of loan growth, it's below the industry level on a YOY basis, coming in at 10.9% YOY and about 3.8% sequentially. The good part is that asset quality has improved. Both the gross NPA ratio and net NPA ratio are down on a sequential basis, and ROA has crossed the 1% level after many quarters, or perhaps for the first time in many years, coming in at 1.05%. Back to you.
Okay, all right, Abhishek, thanks very much for that. So yes, net interest margins and it declining is probably one of the key features that a lot of people will be watching out for in terms of the numbers coming out from the banking space. India Mart, the numbers look good. There is a profit decline, I think, which has come through. Profit is down, but the revenue, I think, was higher. The stock has recovered from the day's low, still sluggish, down around 2%. Market expert Hemang Jani now joins in to discuss a whole range of stocks. Hemang, hi, welcome to the show. If you could just start by giving your comment on South Indian Bank. It's probably assuaged a little bit of concerns ahead of the big boys such as IndusInd and ICICI and the others. But how would you read it?
Good afternoon, Ekta. I think South Indian Bank is too small in the overall scheme of things. However, the initial read of the numbers is that the NII growth has not been that strong. and the margins also are looking weak compared to expectations. I think a large part of the pre-provisioning growth in the profit is because of the other income. So I think having seen the kind of howler that we had from HDFC Bank, I think what people would want to see is that a bank-specific issue, or you have a larger issue in terms of the banking sector numbers, given the lesser growth on the NII front and the deposit growth being much lower than what the market was expecting. So I think IndusInd Bank, Axis, ICICI, I think once we have these numbers, we would have slightly more clarity on that. So in the meantime, I think it makes sense to play a bit safe, because yesterday we had seen about almost 9,000, 10,000 crore delivery marking. Today also HDFC Bank delivery marking could be somewhere in the range of about 4,000 crores. So it will take a while for this to stabilize. So I think it will be good to have a little bit of a cautious approach, particularly when it comes to the banking sector.
By the way, there's one trend that's playing out in the market, and that's pharma. Pharma is up and about. Cipla and Sun anyway are tracking gains of about 2 to 3%. Divi's is now trying to move up from the lows of the day. So this seems to be Dr. Reddy's as well, is seeing some sort of green on the screen. Pharma is becoming a sector of choice this afternoon. Perhaps some of it is, traditional defensive buying when you don't know what else is going on in the market. Or it could be the fact that we have Ekta with us in closing there. So our sector is very, very active. Hemang, your thoughts? Pharma, what is your positioning, and what stocks do you like here?
So we having seen the kind of slide, in the banking sector and in many other pockets, there are very few pockets where one can really hide, and maybe pharma to some extent, FMCG be a space where people will be finding some sort of a comfort. So from a quarterly number standpoint, I think both Cipla and Sun Pharma, and within the mid cap, Laurus Labs is where we are expecting a very strong growth to come through. And also you have incremental triggers in the form of generic pricing, and the domestic market also, some of these companies have delivered good numbers. So I think Sun Pharma, Cipla and Laurus, these are the preferred picks that we have at this point of time.
Okay, all right. Hold that thought, Hemang. By the way, you have Tata Communications. The numbers are just flashing for you on the screen. The revenue growth is looking quite strong, actually. That's up close to 25% on a year-on-year basis. But I'm not sure whether or not there is some one-off item, because the profitability was down sharply on a year-on-year basis. We're waiting for the operational performance. Thus, we'll get the EBITDA number as well as the margins that should be coming up. Yes, there's an exceptional loss of close to around 185 crores. So that explains why there's such a big decline in terms of the profitability. But otherwise, the top line is looking quite good. Up close to, put up the intraday chart. Actually, I think now as we speak, the stock is building onto those gains. It's currently moved to the high point of the day. So that's one stock that we are focusing on. Hemang, numbers aside, but Tata Communications, any view on that name?
So very differentiated kind of a stock, in terms of the technology solutions on the managed internet WAN and Ethernet services, etc. I think this quarterly numbers, people are hoping for a turnaround in two of their verticals: application aware network and WAN internet services. So now that IT services per se, things are not looking that great. Some companies are talking about green shoots. So part of that money could move into either product-based companies or some of these network companies. So from that perspective, this could be an interesting small allocation stock.
Okay, all right. Well, that is on Tata Communication, holding up with a gain of around 1.5% because there has been that exceptional loss which has come through. As you can see, the EBITDA has done well, so it's up around 5-odd%. There's an expansion in terms of revenue as well as EBITDA. Margins are lower at around 20.1% versus 23.8%. So a little bit of a perplexing set of numbers, you'd have to say, for Tata Communication. But the other set of numbers which we're tracking today is ICICI Pru, which disappointed. We have Yash Jain joining in with the details and the analysis on that.
Well, the numbers from ICICI Prudential Life Insurance disappointed, and how as far as the three important aspects are concerned, the annualized premium equivalent, value of new business and margin. The numbers miss CNBC-TV18 estimates on all these three fronts. Not that the number were any better if you look at them on a year-on-year perspective. Total AP, which is annualized premium equivalent, grew just by about 5%, low single digit. VNB, in fact, declined 29% on a year-on-year basis, and margins were down about 1100 basis points on a year-on-year basis. That's 11% erosion as far as the margins are concerned. If you look at other negatives which also, the quarter threw up for the company, the contribution from ICICI Bank to the total AP has fallen further. The net premium income is in low single digit, and there's a sharp rise which has come about as far as the net commission paid in the quarter is concerned. But if I just had to pick a couple of pockets of, positive development as far as the quarter is concerned, the persistency for the company in Q3 has been more or less stable. In fact, improvement in certain cohorts. The management in its conference call spoke about how they expect the annualized premium equivalent to grow in double digit in the next quarter, that is Q4, and finally in FY25 between 13 to 15%.
Okay, that is ICICI Prudential. Quite a disappointment coming through, and a surprisingly large disappointment coming in. Yes, thank you so much for that. Hemang, what do you think? I mean, from the same stable, Lombard had such a good quarter, and now that you have the life insurance company, this one's had a very, very different sort of play out for the third quarter. What is the sense? One-off, or is it a deeper issue?
I think, Surbhi, if you look at ICICI Life performance over the last few quarters, it has been subdued, mainly because of the adverse product mix. The VNB margins have surprised on the negative side, and also unless the company is able to show some traction on the non-ICICI Bank channel, the overall growth would not look that good. So within the insurance space, we like SBI Life and Max Financials. I think relative to some of the other companies, these two companies have delivered better numbers. And also valuation-wise, it is looking quite attractive. So these are the two names that we prefer at this point of time.
Okay, all right, Hemang, stay with us. By the way, India Mart actually has done a bit of a U-turn, I think, from the day's low. The stock was a little bit under pressure. The other income is much lower, so that would be one factor that suppressed the PAT number. And I think let's get the other operational factors. Other income is lower, yes. But the reason that I think the stock has recovered, maybe in fact the margins have not been as bad as what the street had feared earlier. Remember, the management in the past have been telling us that we may not go back to those mid-30 margins in a jiffy, but it's likely to be in the vicinity of close to around 27 to around 30%. I think that's what they've been guiding for. Some point of time, I think we'll get those numbers up for you. But for the time being, we'll slip into a short break. As we do that, let's get you CNBC exclusive. GQG Partners Rajiv Jain remains bullish on India and sees immense potential in the India infrastructure space. They continue to like the Adani group of companies and are optimistic about the stake increase in ITC. Let's hear them out, go into that break and come back.
We are pretty full, so I don't know, we'll double down further because we doubled down on Adani in May and June, and then we maybe triple down in August. So I think we're pretty full. So I don't know whether we'll go further from here because the numbers are actually bigger than what you're stating in terms of our investment and the profits. Yeah, so our profits are running just under 4 billion or thereabouts in the whole investment. We've actually initiated last summer in a bunch of other infra type names, whether JSW Energy, JSW Steel, and a few others. So we do have a number of other positions which will benefit on the cement side and so on and so forth. So we are quite bullish on that side if you take a longer term view, not just the Adani group. And I think the execution story is actually very good, which, by the way, I don't think we feel doesn't get the full day in the sun. If you look at the roads build out, railway build out, airports, privatization, so on and so forth, is actually quite dramatic versus Indian history. So ITC we owned for 2 years, by the way. So we've added a little bit last quarter. ITC we started buying almost 2.5 years ago. So that's not a new position, but that's still reasonably valued. Good volume growth story. The FMCG side of ITC has come to fruition. The hotel side should continue to do well as they spin that off. So at 23 odd times earnings, we feel that's extremely attractively valued versus Unilever, for example, 50 times plus earnings. And this is a business that will grow at close to, sort of, 14-15%. Upside is earnings growth. So if earnings growth is low double digit in local terms, we feel that's the return is going to be. We probably would not get multiple expansion. So I agree, multiple expansion wouldn't happen. But I think the earnings growth, if it's low double digits, and I think you will see in bunch of them, earnings growth could be quite significant.
Welcome back. So the mid-cap space is trying to fight back, and you have, these little snippets of green here and there. Zomato seems to be getting excited ahead of the weekend. Stocks up about 2%. A lot of that gain has happened in the last 1 hour, so perhaps, worth pointing out. There you go, positive on Zomato now. IRB Infra is having a good afternoon as well, almost a 4% rise on IRB. So some names that are standing out today. But let's talk about all the news that we've got from the mid-cap IT space, because it's extremely divergent, the way stocks have reacted, because the numbers have been very, very divergent. The performance has been absolutely different. Let's get Rima in to talk about why an Oracle is reacting 20% up, and why perhaps an LTI Mindtree has been sulking right from the morning down 10%. Rima, take it away. Give us the fine print on these mid-cap IT earnings.
It's really a tale of two cities in these two mid-cap IT names. Now, LTIMindtree used to be an investor favorite. The company has been reporting very strong growth for the last couple of quarters, but this time it's disappointed. And on the other hand, you've got Oracle Financial Services, which has been a bit of a sleeper company. The numbers have been sluggish. The stock price has been compounding at a CAGR of just, 5%, 5-7% for the last 10 years. And this quarter, it's been a blowout performance. So let me quickly run you through the two numbers. Starting with LTIMindtree, revenues and margins were a miss compared to street expectations. The company said the key reason is the furloughs were more than what they were anticipating, and that was a negative surprise. They saw furloughs even in sectors like energy and utilities, which typically does not see furloughs. Secondly, the company also said that Q4 will be similar to Q3, which means no recovery as of now. Recovery will be very gradual. Also, the company has pushed forward its margin guidance of 17 to 18% out by a couple of quarters. So it's now going to be achieved in the medium term. Valuations are also fairly expensive, trading at 32 times forward multiple, more expensive than large cap peers like TCS. And you've got, brokerages like CLSA downgrading LTIMindtree after the miss in Q3. Oracle, on the other hand, as I said, after many sluggish quarters, this quarter it's been a blowout performance. Revenue growth 26% quarter on quarter and on a year-on-year basis. The key driver has been the strong license fee signings. License fee signings have come in at nearly $50 million this quarter, and if I look at the 9-month license fee signings, it's up 76% compared to the same time last year, and this is driving a big beat in the company's margins at nearly 48%.
Okay, all right. Thanks, Reema, for that. So yes, it seems to be a tough quarter, or at least started off on a tough note for a couple of these mid-cap IT companies. But Hemang Jani is still with us. Hemang, LTIMindtree, that stock is down and out. It's down around 10% at this point in time. Do you think that it would probably be an opportunity to enter the stock, to see it through over the next 1 year, where there's a possibility that there would be rate cuts which would come through from the Fed in the second half, and hence maybe budgets and decision making would probably ease up?
Ekta, if you look at the mid-cap IT companies, the narrative over the last 1.5 years was that these companies are delivering much better growth compared to the tier 1 companies. And hence, there was a justification for the valuation. If you look at LTIMindtree, even after 10% cut today, it is quoting at some 27 times FY25 earnings. And management is talking about extremely subdued kind of a growth for the next, let's say, near term, maybe a couple of quarters. It doesn't really make sense to go out and buy it just because the stock has corrected 10%. I think one should really focus on the niche product-based companies within the IT, maybe something like MapMy India, or maybe Naukri, which is more for India-focused kind of a play, rather than trying to buy some of these companies where you are really running a risk of a major disappointment in terms of earnings.
Okay, those are some stocks in focus. Let's look at the market. Still 100 down on the Nifty. That's the story. Bank Nifty is still down about 0.8%. So not much has changed on the screen. Hemang, before we wind up for today, I want to ask you about Asian Paints as well, because when the numbers came, you can't really find fault with 12% volume growth. So, it looked okay. There was margin expansion as well, but clearly the street has not been enthused. So what is your call on the stock, and, what did you make of the management commentary?
I think the volume growth was okay. The concern here, Surbhi, is that the best of the margins are behind. And once you get into a phase where the new players are going to compete in a major way, both the volume growth as well as the margin would have some issues. And the company still is quoting at 55, 57 times forward P. So if it corrects meaningfully, by meaningfully I mean about 10% from the current price point, surely it will merit buying into it from an investment perspective. But at least in the short run, I think it would be good to stay away from this thing.
Okay, all right. Thanks a lot for that, Hemang, for joining in and filling us with that view on a whole host of stocks. By the way, we have Jindal Stainless. The numbers are flashing for you on the screen. The margin for error is very, very limited because the stock is trading at a 52-week high, though the longer-term horizon of the stock looks pretty good because of the utilization of stainless steel. I think we should get that top line number, I think, was more or less in line with what we were working with. So That should come up for you on the screen. While I think the bottom line as well was a little bit better in comparison to our poll. We'll have a chat with the management later on. And in a bit, yes, the bottom line actually is better. We were booking with 650 crores odd in terms of a PAT number. And even the top line is better. That would mean, in fact, that the EBITDA number actually would even be better going by those headline numbers. And the EBITDA number, yes, that's a beat of close to around 90 crores odd. The longer term story of stainless steel in India looks better. That is the market leader, Jindal Stainless. So we'll try to touch base with the management. We need to revise two numbers. One is the volume growth they were talking about is 20%. And the EBITDA per ton, what they were guiding for is around 19 to 20,000 rupees odd. So we'll get chatting for the time being though. Those numbers look good. Some routine profit taking or sell on news kind of story that's playing out. That's why we're seeing a bit of a dip. But make no mistake about it, these numbers look quite good. Let's get in Dinshaw Irani, then CEO Helios Mutual Fund, who joins us on the show. Hi Dinshaw, good afternoon and good to see you in. Dinshaw, need to get straight to the big stock that we've been talking about, HDFC Bank. Just looking at a sell side note that came out an hour or so ago, they're saying you just can't sell a bank trading at around 13, 14 times its forward earnings, even if you have to skim down the earnings expectations by 5-6% odd. What is your view? Is it providing a good entry opportunity as of now? Or you'll say, well, there are plenty of better opportunities out there. Let's avoid this for a couple of quarters and then we'll revisit it.
Good afternoon, Nigel, and a very good afternoon to your viewers and your team as well. So basically, I guessed your question is going to be that you're going to start off with that. It's our favorite stock, right? I mean, it's our number one holding across all our portfolios. So I knew you were going to ask me this. But one thing that I would like to highlight here, Nigel, is that you're talking about 13, 14 Ps, but for a growth rate which is going to be 16, 17% over the next couple of years, in earnings growth I'm talking.
Yes.
If you're ready to give 27, 28 times P's to a sector which is going to grow at 10, 11%, I'm basically referring to IT, right? Why not a bank which is going to be the biggest participant in India's growth story, and this is the largest bank that you have? So we're all for it. In fact, we've been yesterday after the big correction, we did add some. Unfortunately, we don't have much money today to add any. Otherwise, you'd have added more here. So we quite into the stock, and we believe that this is the one which is going to lead the rally if the banking sector does rally later.
Okay, Dinshaw, hi, good afternoon. See, that's the thing. That's what they say about fund managers. You need to be patient. You need to sort of look beyond the obvious, and what you're saying displays every bit of that and more. But let me try and play devil's advocate for a bit. The thing is, the stock has already been testing a lot of people's patience. For the last 1 year, it's one of the worst performing stocks on the Nifty. And coming on the debate is that this issue with HDFC Bank, it will take a while to correct before they can get their deposit franchise in order. And, these deposits, the argument is that they'll come at higher cost because there'll be retail deposits, so margins will come under pressure, etc., etc. What do you say to a lot of these arguments that we've heard over the last 24 hours?
So basically, Sumi, it's going to be for the industry as a whole, right? Not for HDFC alone. Fine, I mean, HDFC has a credit deposit ratio of 110% and so on and so forth. But the fact is that if any franchise is capable of raising money at a reasonable price and capable of raising deposits as a reasonable price, it will be HDFC. If others are, I still remember one of the statements that Aditya Puri had made that if I was to lose my shirt, the others will be running around without their clothes. So that's what it's going to be down here. So we're quite comfortable with the way HDFC Bank is placed today. And I think, if anything, that's the best-in-class stock you'll get in the private sector.
Okay. Well, we have IndusInd Bank, which is reporting, and it's probably going to come out post-markets. That stock is down around 2% ahead of its numbers. We have ICICI Bank on Saturday, Kotak, Axis on Monday. Dinshaw, hi, welcome to the show. Are you watching out for those numbers more keenly, the CD ratios, the net interest margins, and then are you probably going to make a more calculated call towards your exposure towards financials?
No, not really. I mean, as we've been always saying, okay, obviously you look out for these nuances when the results come out, but one quarter will not be changing the overall picture for the medium term as such, right? The fact is that when your GDPs are growing, when your per capita are growing, the financial sector is one that is going to be partaking in this party all along as such. So it's obvious that you need to be there, you need to be focused onto that sector. And the fact is that you need to be in stocks which are probably the best around as such. They've tested, the time-tested stocks. In fact, that's why we picked out these names. We know that even in bad times, they manage their assets very well. They manage their CD ratios very well as such. So that's why we are there in these names. And I think we're very comfortable being there in this sector as a whole. I will not tell you beyond the only name that I've revealed to you, which all others are there, but you can very well look at my portfolio. You can take a guess what all stocks we have in our portfolio.
Dinshaw, some of these new age themes, they suddenly have been doing well. So I need to ask you about some of them. Zomato, case in point, that's moved to the high point of the day as we speak. Paytm, well, it promised, but some negative news flow comes in there and keeps pulling back the stock. What's your view on these themes? Some of them were big underperformers at one point of time. Now they've pulled back from the lows. Your view, how are you all positioned on them?
So Nigel, actually, what do you look in a platform? These are all platform plays, right? I mean, the three things that have to tick off as a yes on a platform plays: do they provide convenience? Is that convenience and cashable? And is that a mass convenience that is available as such, right? All these platforms tick off, put a yes tick on that. The only tick that you need, you need a cross, is that are they easily replicable? In the case of Zomato and Paytm, you know that they're not easily replicable. In fact, in the case of Zomato, globally, you've seen that across countries, across markets, there are only two big players who work out on the food delivery business and such. Yeah, so that's why that's a given, and potential in India is huge for all these platform plays, provided they do give that convenience that is needed by the masses. And that's why we are fairly into these two stocks as such, which I just mentioned. And beyond that, we think the others which are there in this platform plays are, one, the replicability is quite evident in those. So that's why we're not there in other names as such. So.
By the way, we're talking internet companies, and look at the fall in subscribers for IndiaMart. That stock's just falling off the cliff now, 5.5% down, because the fall is really huge. I mean, from 2,000 plus, they've come down to about 1,800, 1,826 to be precise. And that one single parameter is enough to spook the market, especially on a day like today. You don't want any stats which could, indicate any kind of a business disruption or any kind of a problem in the model. And right now, we need more evidence, of course, on IndiaMart, but that one number has not gone down.
The last quarter, they said that they affected some price increases, and that's what affected the addition. And they said that next couple of quarters, it'll be weak, but I don't think the street was prepared for a number, even sub what we saw in quarter 2. They're also given us this guidance that from the start of FY25, we'll be looking back at around 5,000 subscriber addition. So for the time being, this number, the quarter 3 number is weaker than quarter 2. They had pushed through a price increase, and that could have impacted some subscribers as well. Explains why that stock now is getting a hard knock. It's down close to around 6.5%. That recovery actually looks like it's been pushed back by a couple of quarters. That's why the stock is down 7%. Oh. So nothing close to 5,000, and even weaker than what we saw in quarter 2.
Absolutely. IndiaMart definitely not sort of in step. We're talking platform companies. Dinshaw, let me come to the large IT services. Now, this is the part of the market that you've never liked. You've never minced your words on it. But we did see this big pop, and we saw a lot of upgrades, by the way, from a lot of brokers saying that we're probably at the bottom and it'll turn from here. TCS, to be honest, is indicating the same thing. Are you any more convinced now?
So basically, what did they indicate, right? I mean, the commentary, if I was to use a leaf out of pen, they became from hawkish towards neutral. They're still not neutral as such, right? There's no positives coming out here. All they mentioned is that, the cost-saving deals are picking up. There's no discretionary, still way out of the way. The P re-rating should have happened because of discretionary, because of margin expansions. That's not happening right now. I mean, they're holding on to the margin. That's a good part. Mainly because the manpower costs have eased out to that extent, which actually to me is not that great news, because you still don't have a bench. Your utilization levels are at all-time peaks, and you're not building up a bench also. So it's obvious that they also are seeing some kind of uncertainty going forward. So that's why we believe that. And mind you, one has to already build in the fact that if US is looking at cutting off rates in the coming future, they're talking about some kind of a recession hitting them. So if that happens, the IT spends are not going to happen in a rush. So our feel is I think everybody's jumped the gun rather on this one.
Okay, well, you could delay decision making, but you need medicines. So, Dinshaw, I'm going to ask you about Sun Pharma because that stock is the top gainer on the Nifty this afternoon. It's a weak market. It's seeing buying at these levels. And it's going to take one of its US subsidiaries private, Taro. They're paying over, I think, $300 million for that. What is your take on Sun? Very strong specialty business, good margins, which have improved in the past couple of quarters. Would it be a portfolio stock?
So I won't tell you whether it's what's our view on Sun Pharma per se, but I'll tell you about the pharma industry as a whole. We are more comfortable with domestic-facing pharma than the US one. Yeah, the US cycles have turned in a way. It's obvious that the pricing pressure, which was there in the US, is easing out. There's still some pressure left there, but it's easing out in a big way. But our belief is that the domestic pharma plays are more, or rather the CDMO plays, if at all we're looking at exporters out of India, the CDMOs are the guys we are more comfortable with. The domestic pharmas are definitely going to be big gainers because you're talking about, as I said, that if your discretionary spends are going to go up, your spends on healthcare, your spends on your own self are going to move up. On your health, your own health is going to move up quite appreciably, and that's why we're more comfortable with these kind of names rather than pure A&DA plays who are playing out on patent expiries in the US.
Okay, all right. Dinshaw, good talking to you as always. Thank you very much for joining in, and I look forward to our next conversation. Thanks for being with us today. That's a chat on pharma. By the way, Ekta, I remember you were telling us, just to remind our viewers, memory on Sun Pharma, there's news today. There's so much talk on IT and banks and HDFC Bank. There's important news on Sun, right? Now, Taro will become their 100% owned subsidiary. Remind us why that's good for Sun?
Well, yes, but before that, we also have the Polycab numbers. 416 odd crores is what they've reported in terms of profit versus our poll of around 434 odd crores. So it is below estimates. Revenue at around 4,340 odd crores, which is also below our estimate of around 4,477 odd crores. So it seems as though it's missed estimates both in terms of revenue as well as profit. It's not a drastic miss, but nonetheless, it's come in below what at least the street was anticipating. The margins and the EBITDA should come up for you. Remember, the stock has already seen quite a correction and volatility. So maybe a lot of it is probably factored in, but and it's not really surprised the street on the downside. But we'll wait by for the EBITDA as well as the margins. EBITDA is actually significantly below estimates, 569 odd crores versus 623 odd crores in terms of what they've reported, 13.1% in terms of margins versus 14%. So around 100 basis points reduction in terms of margins as compared to at least our poll.
I think actually these numbers will go down as more or less in line with what the street was working with, a little bit of a negative bias, I think. So because, on the top line, the growth is fairly good. Our poll was expecting, I think, close to around a 20% growth. But I was reading a couple of brokerages like Jefferies, they were working with mid-teens. And this is mid-teens, right? Even on the EBITDA front, well, the margins are holding around that 13%, approximately 13.1% if I saw that number correctly. So it's a little bit lower than our poll. But the reason that, in fact, the stock is not selling off is because for a couple of brokerages, these numbers would be more or less in line. The important part is going to be the commentary from here on, which is going to be very, very crucial from here on. But otherwise, I don't think there's a big miss in terms of the numbers, at least as of now.
I think the conference call will be the most important for Polycab this quarter.
No, because I think Polycab has now become a stock for beyond just the basic numbers and business analysis. There's a lot more, and it's for investors who are willing to go in with the ride and who are willing to play the slightly high risk game because we don't know the outcome of all the allegations that were raised. So I think we'll get some clarity, as you said on that call today.
Absolutely, and if there's any impact, it'll probably come in next quarter, one, and two, the commentary from the management will probably be critical in terms of assessing what they are doing, what the questions from the analysts are as well. That'll give you a sense in terms of what the market is thinking with regards to Polycab. But like you mentioned in terms of Sun Pharma, I just want to point out that, Taro has a lot of cash on their books. They have around a $1 billion cash surplus on their books. And that is exactly what Sun Pharma is going to inherit with taking the company private. And I think that's the reason why you're seeing Sun up around 2 to 3 odd% and seeing that sort of traction come through.
$1 billion, someone gives me that kind of money, I'd also be dancing around wearing all shades of green. So
let's go into a break, I think.
Let's take a break. And as always, we'll get you a check on what the dealing rooms are saying in our segment, D Street Chatter. And we'll get you our buy today, sell tomorrow calls as well.
Well, I think in a bit of an expiry-related move is what we are seeing. So the markets have moved up a little bit from the day's low. We're still down close to under 100 points. So the good news is we almost have the mid-cap index that's moved into the green. But let's go across to Nimesh. She's joining us on D Street Chatter to tell us what's he picking up in terms of dealing room. Nimesh, the flows are still negative today, or is there a bit of a turnaround?
Well, looks like the flows are negative. So that's the sense I'm getting, that the FIs continue to be better sellers even in today's market. But if you look at the overall markets, looks like the risk off is going to continue, and that's largely dragged by the financials. Again, for second day running, HDFC Bank is down more than 3 odd %, despite such a large delivery-based selling happening in that stock in yesterday's trade. So that pain seems to be continuing in the HDFC Bank stock. Overall, from a earnings perspective, that's where the big reaction is coming in. So earnings is going to be a big dominant trend in the near term. Look at what has happened to Oracle today. In a single day, the stock is up 28%. Vis-a-vis the stocks like ICICI Pru Life down 6 odd % on weak numbers, and so is L&T Mindtree. So it's very individual, earnings specific reactions coming in today's trade. But from a sector perspective, some bit of traction seems to be back in pharma names. So all the pharma stocks are buzzing in trade today, good volumes as well. But overall, from a flow perspective, the feedback is the FIs continue to be better sellers.
Okay, all right, Nimesh, and stocks?
Well, in terms of individual names, the first stock is Utkarsh Small Finance Bank. a small stock in a weak market, that stock is buzzing and on good volumes as well. I understand the flows are quite strong at HNI. It looks like some larger HNI seems to be quite active buyers in that particular stock. So that's the first name. Second, both BPCL and IOC. Today, the stocks are not reacting. It's pretty much flat, but in both the stocks, expect high delivery volumes, and there is buying interest back from larger institutions in both in all the OMC stocks, particularly BPCL and IOC in today's trade. The third is Voltas. Well, the stock is recovered from intraday lows, but I understand there are very strong sell flows from larger FIs in today's trade. So expect high delivery volumes on the negative side in Voltas in today's trade. And the last is Hindware Home. We saw a very small block, nearly 5-6 lakh shares got traded in the last half an hour of trade in that particular stock, and after that, 2% reaction on the downside in that stock as well. The sense I'm getting is maybe a leading domestic insurance company was a likely buyer in today's block. So the disclosures could be interesting in Hindware Homes in today's trade.
Okay, all right, Nimesh, thank you very much for joining in with all the action from dealing rooms as usual. Let's now move to some earnings expectations. Of course, big boy Reliance will be coming out with its numbers tomorrow. Sonia is here to tell us what to expect. Sonia.
Thanks a lot for that. It is expected to be a mixed quarter for Reliance Industries this time around. First, let's take you through the stock performance. The stock has done quite well, actually. In the last 1 month, it's up about 10-odd%, and the stock is 4% away from its 52-week high of 28.56. However, this quarter, the numbers are expected to be largely flattish on most parameters. Let's go through it. Revenues are expected to slightly improve to 2.5 lakh crores. The pressure is expected to come through on the operational side this time. So we're expecting an EBITDA to be largely flat on an absolute basis. But the margins, EBITDA margins, are expected to come off to around 16.4% versus 17.7% last quarter. On the profitability front, a slight improvement at 17,800 crores is what we're looking at. But the entire oil and gas industry has been under pressure this quarter, and Reliance is not too far behind. It will be a weak quarter for oil and gas companies, particularly in the oil to chemicals business has been on the weaker side. However, that will be offset by stability that we're expecting in Reliance Retail as well as Reliance Jio. So let's get down to a couple of expectations over there. On the consolidated front, the EBITDA will be largely flat, as I said. But if you look at the consumer-facing businesses for Reliance Jio, the EBITDA could rise by 4% quarter on quarter. And for retail as well, we expect an improvement. In Jio particularly, expect 12 million net subscriber additions to come through this time. And, the other important internal to track is the average revenue per user. Slight uptick over there to 183 rupees versus 182 last quarter. In the retail side, there has been an improvement in consumer demand because of the festive season, and hence we're expecting the EBITDA to rise 5% quarter on quarter. Not just that, there's operating leverage that kicks in this time around as well. Now, a couple of key monitorables overall for the business. One is there any kind of indication on what the spend is in the energy business? Remember, there's a 750 billion rupee announcement that Reliance Industries has made in the new energy business. Further clarity on that will be keenly awaited. Apart from that, any growth in retail store additions as well as any pricing action in the telecom space are key monitorables. But standard disclaimer, Reliance Industries is the owner of the channel that you're watching.
Okay, all right, Sonia, thanks a lot for that. Well, let's talk about Ultratech Cement. The big boy comes out with a set of numbers as well tomorrow. And if you look at, the last few days, the stock has been a little bit under pressure. It's come off 5 to 6% from the recent peak. In terms of the numbers, we're booking 7.5% growth on the top line. EBITDA numbers expected to grow by close to around 35%, which would mean margins will expand big time. For Ultratech Cement, the reason that the stock saw some bit of nervousness is because the volume growth was only around 5%. The sheet was getting used to, big outpacing in terms of the industry growth. But this time around, it appears they've grown in line with the industry, though the overseas business grew better, which gave you a consolidated volume growth of around 6%. Though some part of the street was still disappointed even with that number. The other factors at play will be realizations will be up by close to around 2% on a sequential basis, 2 to 3% approximately. And the EBITDA per ton or the EBITDA margins will be aided by some kind of operating leverage that will play out, better prices, as well as input costs could have cooled off because power and fuel costs did see a bit of a decline. What are we looking at? We're looking at management commentary on pricing, on demand ahead of the elections, and also how is the expansion progressing. So that's all the management commentary that we'll be keeping an eye out on. Sudeep Bandyopadhyay joins us on the show. Hi, Sudeep. Since we just spoke about, Ultratech Cement, let me know your view on the cement space and what's your pick out there.
Well, Ultratech has been my favorite stock, Nigel, for quite some time. And I believe it's better to go with the industry leader by far. Pretty much all these segments where there is a consumer demand and consumer interaction as well. Though cement is not a fancy product or not somebody will aspire for it, but the brand counts. And UltraTech has done pretty well in terms of outpacing the industry growth generally. This quarter may not have been anything great, but generally they have been outpacing the industry growth. Also, the consolidation opportunity which exists in the industry does present a significant opportunity going forward for UltraTech. As things stand today, with a significant tailwind for demand, I think UltraTech is poised to do well. And if I have to buy one cement company, I will go and buy UltraTech. If I have the option of buying few more, I will probably still look at Gujarat Ambuja and SEC as well.
Okay, all right, Sudeep, well, just stay on. We need to take a quick break and come back, but we have a whole host of stocks to discuss, not to mention that we leave the markets before this break with the Bank Nifty down around 360 odd points and the mid-cap index just about lower by around 80 odd points. Take a break and be back. Stay tuned.
Welcome back. You're with us on Closing Bell, and we have just the final leg of trade left now. Sudeep Bandyopadhyay is still with us. Sudeep, good to have you on the show. We were just discussing the polycap numbers, for the time being. Your thoughts on all that has transpired? The numbers, were more or less in sync with the poll, but the all-important conference call takes place tomorrow. What have you made of the fall, and what are you doing with polycap and its peers?
Thanks, Surbi. I think the numbers, you're absolutely right. By and large, these are the numbers which were expected. So nothing much as far as the numbers are concerned. Of course, we will have to carefully listen to the management conference call where they will surely talk about what happened and the way they envisage the way forward. Of course, when something like this happens, it's a matter of concern. But there are certain practices which one particular industry has, and we understand that this industry has seen a lot of practices which are not absolutely appropriate. So not saying that Polycab or the other leading companies are involved in those practices, but they have to distance themselves from that practice. So I think that's the thing, and management will, I'm sure, clarify. Fundamentally, I think this is a great industry with the kind of construction infrastructure build we have been seeing around us, and this tempo is going to continue for the foreseeable future. Under the circumstances, I think there is enough scope for business expansion. Now, as far as valuation is concerned, of course, it was very richly valued. And post this correction, I think it has become a little more, affordable, so to say. So if somebody is an aggressive investor, I would say for them, it's a good bet to enter at current levels.
Okay, well, Sudeep, what was your view on Asian Paints and what they reported this time?
I think it's a very good set of numbers. The kind of volume growth they have shown, the kind of margin expansion they have shown, and the way they have explained that what they will invest for future growth in marketing. I think that was very clear commentary, and I liked what they said. And look, I think this is one industry which has got significant competition. More competition is coming, but in spite of that, I think Asian Paints is continuously gaining, volume share, and this is quite commendable. And if in the paint industry somebody has to go with one company, of course it has to be Asian Paints. If you have to pick a second company, then you will discuss multiple other options and take a call. But if it has to be one company, it's Asian Paints.
Okay, all right. Let's try to squeeze in one last, take from you, Sudeep. Tata Communications, the street, it seems, really lacked those numbers. I don't know whether you had a chance to look at it. There was a one-off in the profitability, and that's why that looked depressed. But it appears on the top line, there's a growth of around 25%, and that one's moved to the high point of the day. Any view on this one?
I think the managed IT services business part of theirs, where they provide the internet services, that piece has done well. And I think they have been working on it. It's a slightly differentiated technology business. And they've been working on it for a very long time. I think finally they're getting their act together there. And leave aside the exceptional loss, I mean, that's one off. Other than that, the numbers look good, and I think the market is appreciating that, and that's why the price have moved up post they announced the quarterly results. Fundamentally, I like the stock, and if somebody is not looking at scorching returns or something extraordinary, they want a steady, stable company to remain invested in, Tata Communication is a good bet.
Okay, all right, Sudeep, we'll leave it on that note. Thank you very much for joining in. Appreciate your time with us today. Well, we have to start wrapping out what has been a day that's it's been symbolic because there's been a big fight, but the net result is still negative. Though all is not lost because the mid-cap index, as we are closing out, is trying very hard to see a positive green tick, but just 4 points lower. So the story of the market is recovery in mid-caps. A lot of the large caps providing some semblance of support. That would be a Reliance, that would be a L&T, TCS. But the problem lies with the banks. HDFC Bank has seen another 3% cut, and there's a lot of pressure on that side of the market, which is why the Nifty not quite managing to make further headway from that level.
Okay, well, yes, but specific stocks within the broader markets really stood out in terms of earning reaction. So we had LTI Mindtree, which is going home with deep cuts, ICICI Prudential as well. India Mart, where the profit was down 28%, the new addition of paying subscribers was lower as well. Tata Communication, which did well, so revenue was up around 24% on a year-on-year basis. Polycab, there was a little bit of volatility post numbers, so Polycab should come up for you. The conference call is tomorrow. That will become critical. One of the big stocks for today in terms of a reaction was definitely South Indian Bank. That one is going home with a good amount of gains of 7 to 8%. And we have a lot of financials which will be coming out post-markets, IndusInd Bank, Poonawalla FinCorp. So a lot to watch for.
We'll just pull up the mid-cap index. I think that should come up for you. The final tick of the mid-cap index is in the green. So the bulls will say, hey, thank God for that. In the first hour of trade, the mid-cap index itself was down 2.5%, with stocks down close to around 10 to around 15% approximately. So good to see some bit of a recovery and an advanced decline ratio as well. Pretty much even Stevens with one stock advancing for every one stock that was declining, and plenty of big stocks actually. You had Vascon. That stock was up in today's trading session. Big up move is what we saw out there. A few other notable big movers today. PCBL, Philips Carbon Black. Sonal had told us those numbers were quite good. That stock did spike up in trade. You had Suzlon Energy, big volume mover in today's trading session. So pockets of strength actually in an otherwise wobbly looking screen. But again, the final tick should be on the mid-cap index, ending higher with a gain of 20 points.
Imagine it managed that green finally towards the end. What a pullback, what a fight, really. With that, it's a wrap on this edition of Closing Bell. We will have all the action on Markets Forward up next.